Hi, today is November 25th. I haven't got much of a voice, but if I don't do it today, I'm gonna skip the week. So this is gonna be short. Hopefully by Sunday, Monday, I'll be able to record some proper video. So we start with the SPX 500, the CFD that trades 24 hours a day. By the way, the SPX options, like VIX options, now trade almost like 24 hours a day, like the ES options on the futures have done forever. Now let's go to this 4-hour chart. As you can see here, we've had a kind of a tug of war. We've got a strong resistance that has gone down to the same key level, 46.85, 46.90. The market has been testing this level, going down, and then yesterday, although this up move was a fairly low volume, basically the market stopped trading after 1 o'clock. So let's take this late bull run with a pinch of salt. But as we can see, this level is definitely acting as a pivot, and we know that we have, if you look at here, 46, let's say 50 to 46.90, 47.30. The salient levels are about 40 points apart. This level was the low here. And although I'm not sponsored with TradingView, I would definitely recommend that you go for the Black Friday offer. It's going to cost you less than $10 a month for the Pro version. I have the Pro Plus for $15 a month using Black Friday, which I think is a good deal. Anyway, that aside, as you can see, we have a bit of a trading range, about 80 points apart with this key level in the middle. The tug of war is further enhanced because this is a strong resistance here. And if we look at the 1-hour chart, this is actually a support. That's why there's really some tension. Where is the market going to go? We have, as you have seen on Slack, we have a very strange SPX VIX correlation, currently positive about 40%, far away from its long-term average. So we know that correlation, okay, that's no causality, but either SPX has to go up with current levels or the market has to go down. Mean reversion on that correlation is absolutely inevitable. So we will see how it goes, but at the time, in the short term, all we see is this type of trading range. So this key level is important, bottom and top here. I think the upside potential is fairly limited, but we will of course check the usual suspects, the tech titans, FANG plus Tesla for direction. In a way, it's fairly easy to check the market. It's a huge concentration, there's not much of a distribution. So basically look at Apple, Amazon and the rest, and you know more or less where the market is going. On top of that, we have a lower correlation with the Dow. It's really NASDAQ, and within NASDAQ the behemoth within it. Anyway, so this is the SPX, and I would say in this 4-hour chart, maybe next week we'll have a breakout, and I would anticipate, or at least not be surprised if the market breaks down. But we've got 46.90, 46.50, so we've got a few key levels to watch before that happens. As I said, I watch the FANG on a daily basis. This is a 4-hour chart. On the FANG, I could certainly do a FANG plus Tesla, but a FANG is a ready-made ETF provided by a broker. That's good enough for me. So we have this upper channel here, 56.25 is a strong support, or actually a pivot, but combined with the channel lows, it's actually a strong support, and that's why yesterday I thought the downside potential was limited and the market bounced as I expected. So now let's go back to SPX. We can look at the daily chart, but if we have that mean reversion coming, I think the daily chart will not be much of a help. I think it's better to stick to 1-hour, 4-hour chart and review our scenarios or outlook on a daily basis. So here, of course, we've got that upper channel. We will probably pump on some strong resistance. At the moment, I would say 47.60 is pretty strong. So I would assume that if we have a correction, it would not go below 45, 40, 45, 50. We could draw, and as I said, I'm not paying too much attention to this, but we could definitely draw a fib from here and see that yes, on 45, 60, we've got the first salient fib, and I don't even think it would go down to 44.50. But okay, let's leave it there. So for tomorrow and maybe on Monday, I would say again, continuation of this trading range, key levels. I don't think the market will go up too much, but as I said before, we have a strange situation where on the 1 hour this is strong support, and on the time frames it's looking like a resistance. So maybe short-term push and medium-term pull. Okay, so that is it for now. If you follow my Slack updates twice a day, of course, I check the US 100. This is the NASDAQ, because the correlation is still pretty strong. We see the volumes are actually right here. So again, discard what happened late in the day. As you can see, there's no volumes after, well, this is after the close anyway. I check the FANG, and also something that I look at now more and more is because we have a fairly slow growth on the US economy, and we have worries on coming from China, Evergrande, whatnot. I mean, China will probably slow down, and it could actually pull the world economy with it. So the outlook is not looking too bright. And if we break this level, I would say around just below 0.975, we could have this going down, which would mean that the yields on the short term of the curve will go high. And so that means that there will be a demand for higher rates. So we can look at it as a warning that what the Fed should do or what the Fed will do. So this is actually a good indication going forward. So if it breaks and if it goes down to this level, the bond market will take the equity market with it. The bond market is much bigger than the equity market. Okay, so that's it for now. You know more or less what I look at. If you have any question, join Slack if you're not there, ask questions. I really recommend that you, even if it's just on the surface, that you take some macroeconomic, geopolitical view on the market. The market is not normal. This bullish high vol market is not normal. It's not really sustainable over the long run. So we have to be prepared. That's why, and we will check that in the next video when I get my voice back, we have to be fairly conservative on our positions. That was much longer than anticipated for a day without much of a voice. Thank you for watching, and bye for now.